All right, hello everybody. Doug here with the LincolnList.com. In today's video, what I'd like to do is tie up a couple of loose ends that we had from last week's webinar, which was the how I became a successful trader after blowing up 2 accounts. Now, if this happens to be the first time you're watching this video, you saw it on social media or you saw it on YouTube, you're going to get a good value out of it anyway. But if you'd like to see the prequel to this, what actually led us to this topic here today, I'm going to post a link. You can watch that webinar anytime that you want. Now, where we're going to start with this is in the beginning, we talked about what you needed to have a successful trading strategy. And I posted that slide back up here, which is number one, an area of price where you're willing to do business, something that will help you say yes to a particular idea. Once you say yes to that idea, the second thing that your strategy should have and should do for you is a way that you can control risk in case this idea is no good and you're wrong. And as long as you're winning at 55% of the time, then you can make a handsome living as a trader. You can be very successful for a long time in this business. Now, a lot of people emailed back and said, you know what, I have this, but I'm still not making money. And in fact, there was an enormous response to this. And because of the time capping off at about 1 hour with the webinar, I never really got a chance to just get down deep into this topic. So I kind of want to just touch up on that, tie up a couple of loose ends from it, and kind of give you an idea of what I mean, why this actually works. I made mention in the webinar that if you have this right now and you're not successful, it's not the strategy. It's not the execution. Now, of course, your strategy could have a higher win rate. That doesn't hurt. It would be nice if it was 90. That even makes it better. And, execution helps you prevent problems like being stopped out or getting faked out, and just getting a better entry helps you make more money. But it's not the most important thing when it comes down to the component of a successful trader, being a successful trader. And if you have that and it's not working, the key is management. Now, I know I said something about that, but I didn't really explain what does trade management mean? And that's what a lot of people are asking. What do you mean by managing? I want you to put yourself in this position. And that's the position that when you take a trade, it's not about how well you did with the entry. I mean, like I said, it helps. It's not so much the idea, the strategy, and all of that. What's more important, the biggest element, is how you manage what happens when you're in that trade. Because some of the ideas that you have will work perfectly. But most of the trades that you have will not just be easy. When I say easy, let's say you're buying a stock. You buy it, 5 minutes later you sell it for a huge profit. You were never in the red. It just takes off perfectly. You entered at the right price. You were never in the red. It just goes straight up in the air. Boom, you sell. You might get 1 out of 50 of that. For the rest of them, you're going to have to manage your way in and out of these trades and continue to monitor that stock or the trade vehicle, whatever you're using, to make sure that it's not turning against you or when you're supposed to cut, and so on. So maybe this management talk, what we're going to have here today, will help you tie up a couple of things in your trading. I'm going to pull up a stock chart here, and let's take a look at this LL. This is from today. And we'll start out with, this was a trade that I had, and I was actually short this stock, but I want to show you what trade management means, or successful trade management is all about. And we'll start out with this example. So first, I'll just give you a brief idea. I like to short stocks, and I wouldn't say this was a perfect tier 1 pattern, but it was pretty close. You got a stock that's gapped up enormously. It's 30+% pretty much to start the day. And not only that, once the market opens, you start to get a pretty significant run up. Now, if you're not already in this stock, odds are this is a really poor time to buy it. Now, that doesn't mean if you buy it, it's not going to be a winning trade for you. But sometimes we, mistake luck for, success. And as I said as well in the webinar, what's more important about how you trade is not what you do on one trade, but what you do over the span of 10 or 15. That's what makes the difference. So, if you buy 10 or 15 of these trades like this after they're ramping up, you're going to lose most of the time. But that's another topic. So anyway, what happens is the stock starts to run up, and I decide, you know what, I'd like to take a short opportunity on this stock. I feel that it's too late for me to buy, and that becomes my idea. It's part of my strategy. It's part of what's made me successful. So I decide, you know what, I'm going to take a shot. So I start going into this thing short up here. Now, what I want you to pay close attention to is after this thing runs up, and I get short around this 32 mark, about 15 minutes in. These are 5-minute candles, by the way, on a 5-minute chart up top. Once I get short up here, you see the very next bar starts to turn red, which is exactly what I'm looking for. And you see right here, I'm going to open this up just a little bit more so everybody can see it. Let's go back and take a look, because I want you to see these candles right here. And if you can see real closely, there's a little bit of a wick on this. So what's happened here is this candle was once all red, but before this 5-minute session was over, it kind of just wiggled its way back up to this 31.77. Then the next 5-minute session comes in, and it's about the same thing. The stock tries to go red again, filling in there, dropping down to this 31.44 level right here in price, about where it was on the previous candle. But it does the same thing, wiggles its way back up to 31.69, 31.70 area. And then you have now a third candle that basically does the same thing, and, drops down to the 31.40 area. And before the 5 minutes is over, it's wiggled its way back up to that same 31.70. So it's stuck tightly within that 31.70 topside range, 31.40 to the lower range. Now, one of the things that you have to face with here is, both long and short. Maybe you're a flag buyer and you bought this, and maybe you're a short seller and you shorted where I did. At this point, nobody's right here. You're just stuck. The stock is doing nothing. But the bigger underlying thing of this is this stock is already up a significant percent. I mean, a massive percent. And this not really giving up a whole lot. So when you're just kind of using common sense, you're saying, man, this is a big run, and now it's just been sitting up there for 15 minutes. It's not coming down. Now, one of the points that I referenced to at the webinar was when you enter a trade, you expect it to work within a certain time frame. So to me, I have a mental stop in my head at this point at 32.27, which is the high of days. It doesn't have to be perfect. Maybe it's going to be 32.30, 32.50 or something like that. Maybe give it a little wiggle room over high of day. But the point is, it's not breaking down. It's had a lot of time to do that, and it's not like it's just up 2% here. It's up a lot. It should be giving up. So there's an absence of sellers, and nobody's really letting go of this trade. So what happens here is it just, it starts to come back here. Now this is minute number 20 since I've been short, and just starts to perk up. And at this point, I take the high road and say, look, this thing should have come down. It's not coming down. It's obvious this 31.40 to the low side here is important. This is the number that the market has pulled out as short-term support. It is holding it after a 30% run up. I got to get out. Now, later on, this thing does ramp up a pretty good. So it came out to be a good call, good idea, a good way to manage the trade. Now, there's a chance that this thing would not have done that. Let's say, it just pops up here green and then it just sells off. Well, you can always get back in once it crosses that level, but that's going to be the chance that you take sometimes as a trader. The management part comes in that, for me, was not just price movement, breaking certain support or resistance levels or going against you so much as time itself. You're expecting something to work within a certain period of time, and what you're trying to do is manage each and every one of those trades, and you're going to make mistakes at times, but what we're really trying to do, like I said at the beginning, with managing, is you're trying to prevent yourself from entering an absolute nightmare. Now, by the time the day was over, it didn't go too much further away from my price. We have at 33.50, now it's at 34.10, whatever. But what I want to highlight here, whether you go long or you go short or whatever your trade, this is where traders really lose money, is poor management. Because what can happen in a situation like this is I could say, well, I've got a lot of money. I've made a lot of money trading. I can let this float a couple of dollars against me. I'm not that heavy. That's fine. And then it does that. And then you add to that position But what if it gaps up tomorrow to 38 and then goes to 40? And then you add again and it decides it wants to go to 45. Now, maybe ultimately in this whole grand scheme of things, you're going to be right in your call. Maybe I said, yeah, it'll be $25 next Tuesday. This thing's going to give it all up. But will you be able to remain solvent through those times, or will you inherit a really humongous loss, if you know what I'm saying? This is how a trade turns real bad on a trader, and we talked about that as well in the webinar with the blowout trades. This is the beginning of how one starts. It starts out innocent. It gives you a chance to get out, but you make excuses for the stock. You make excuses for your biases towards the stock. Now, to me, it wasn't a matter whether, LL is worth this price or it's not worth this price. Because I'm like, it's not. This is too much. It's stupid. But you know what? It doesn't matter what I think. So far, it's still ripping. And if I'm going to hold it, then all I'm going to do is continue to compound this problem. And each and every time it ticks up another dollar, it becomes more and more difficult. But again, as I said, what I want to highlight where it really hurts the trader is what if it turns into something nasty? What if you get something like it's the beginning stages of a fizz, an FIZZ, and you're starting your short here on a ludicrous parabolic, and you make excuses for it, and the stock goes from 67 to 100. I mean, at some point, you'll have to cut that loss. You'll either run out of money or you'll just give up on it. But again, the thing I want to make clear about managing is you manage through risk itself via stop loss. But also what you should be paying attention to managing as well as with time. You're expecting something to work out within a certain amount of time. If it doesn't, you have to leave. Now, maybe 90% of those trades that you left early for small gains or small losses could have worked out if you would have fought with them. But it's that one trade, that one or two trades, that small percentage that get away from you, that turn into an absolute disaster, like maybe buying a Tesla all the way up here on a breakout at 386 and saying, it's great, and then a few days later, it tanks all the way to 312. As we saw with the market not but a few days ago, I think it was on Thursday, where you saw a heavy piece of intraday selling right here. You got this big old wipeout. I mean, those things still exist. And yes, it comes back, but there's going to be stocks where it doesn't come back. A lot of people took hits in here being ignorant like that. You saw a lot of stocks get hit. And again, this is what you're trying to prevent yourself. You're not trying to bank on every trade. You're not trying to be right on every trade. What you're trying to do is not kill yourself or let something innocent, like a nice little small, easy short setup on an LL, turn into a multi-day runner and you're still fighting with it. You can't do that. You can short it. There's nothing wrong with going up in there, finding your pivot, hitting your short, using reasonable size. Even if everyone watching this video disagrees with that strategy, there's nothing wrong with doing it, because there's never a bad trade if you have a stop in place. There's never a bad trade if you have risk, and there's never a bad trade if you're a good trade manager. So keep that in mind. I hope this kind of touched up on it. If you have any more questions, guys, from that video, feel free to reach out to me, support@thelincolnlist.com. Take care of yourselves. Till next time, see you then.